There's a second wave of inflation brewing, and based upon history, there's a lot we can learn. Does rising freight costs signal a second wave of inflation? According to the charts, that might be the case. So, as of now, everyone knows that the economy is showing clear signs of stress, evidenced by two critical metrics: the consumer price index and global shipping freight costs. And recent data points to a concerning second wave of inflation, with the CPI's year-over-year growth rate mirroring those of the volatile 1970s up until the early 1980s. And what am I talking about? Here we have a U.S. consumer price index chart with two different time periods. And as you can see, there were two surges of what would be considered extreme inflation concerns. And to take a closer look at that, here's a chart that just shows these two surges I'm referring to here. And if we look closer, we can see that in November of 1974, the United States CPI unadjusted peaked out at 12.3%. And then following monetary response, it bottomed out in December of 1976 at 4.9%. And so based upon that surge, a lot of analysts is considering the similar bout with inflation that we just had to mimic that same type of activity that took place in the 70s, where due to a variety of economic and financial issues, and in particular the whole oil embargo situation, and also the shifting of the whole petrodollar maneuvering that took place, led to a surge of the CPI figure, as you can see from that chart. But it appears that it took 2 years to go from that then all-time high of 12.3 down to 4.9%. And then in December of 76, when it bottomed out at 4.9, 2 years after the surge, it took off again in April of 1977, reaching 6.4. And the reason I mentioned it took off again was because that's currently where we could be right now with the whole narrative of inflation being tamed by this quantitative easing process. And clearly that's not the case, because it's been creeping up every single month since it's bottomed. And so now the question is, how high does it go from here? And if history was to repeat again, it could flatline for a little bit, similar to like it did in 1978. And then in 1978, when it was 6.6%, it then shot up. According to this chart here, in December of 1979, it was 13.3%. And if history is any indicator of what we could possibly expect, it wouldn't surprise me one bit that we have a second wave coming. And this is just based upon the current CPI figures that somewhat resemble what we're going through now. And then back to this original graph here. So as we can see, I just went through the whole red double spike. And then we have the blue overlaid on top. And that is a year over year from September 2013 all the way up until April of this year. So as we can see, from the very start of this graph, everything is very similar in nature, mimicking that first surge. In the blue, for us most recently, reached the 40-year high of 9.1% in June of 22. And here we are 2 years later, where it bottomed out and now started to hover around that 3 to 3.5 range. And could there be a sudden spike and then it taking off to the races again? Not quite sure. But so far, this chart here mimics just over half of the activity that took place in the 70s and early 80s. So it's just something to think about. But it doesn't stop there. Despite the claims of the spurious correlation, the similarities are hard to ignore, igniting a persistent inflationary trend. And then you factor in the global shipping freight costs are also on an upward trajectory as well. The initial spike in early 2021 appears to be the first wave of what we would consider the resulting surge in CPI, which was fueled by the pandemic disruptions. And then as we see what looks like a possible second wave starting in early January 2024, could this next wave be the second wave that mimics the CPI figures from the chart just a moment ago? This current increase shown across multiple indices such as the CCFI and the SCFI, which the CCFI stands for the China Containerized Freight Index, which is a widely recognized benchmark for global container shipment markets, reflects the changes in freight rates and the volume of 12 selected trade routes around the world. And as I scroll down here, the SCFI, which is the Shanghai Containerized Freight Index, is based upon the spot rates for Shanghai to the ports in the index, which is a much more limited and narrower scope beyond the CCFI. But those metrics underscore the ongoing supply chain woes and escalating costs in international trade. So clearly, it looks like the Federal Reserve faces a complex dilemma. On one hand, lowering interest rates could alleviate the debt service burden that our government is experiencing right now, which definitely is a growing concern as borrowing costs continue to rise. But then on the other hand, this approach risks further inflating prices in an already inflation-prone environment. So this complex balance really intensifies the appeal of hard assets at this current moment, which in times past, especially during the 70s, offer protection against inflationary pressure. We all know too well the price action that took place at the same time the CPI figures went bananas. Look no further than the area right here, where as a result of all that CPI inflation, silver in the blue shot up to 50 an ounce and gold got up to 800. And that's a good reason why investors are increasingly eyeing sound money in this current environment, as well as other tangible assets as safe havens in what looks like a repeat or a second wave of turbulent times. So at the end of the day, the converging trends of rising freight costs and a potential second wave of inflation signal a supercharged environment for both gold and silver. This only further backs the Fed into the corner, forcing them to make some tough decisions, which in my opinion at this current point is already irrelevant because the damage is already baked into the equation. So now at this point, we just got to sit and be patient and continue to stack, as well as look for opportunities in all this chaos before the second wave officially hits. Because in my opinion as well, it's not an if, it's more so when, because the monetary system can only continue to move forward as long as the monetary base expands. And right now they're holding off as best as they can and not cutting back on that monetary spigot I talk about all the time. So basically the manipulation will continue on. But then again, it buys you more time to continue to prepare and brace for impact, because when it hits, it's going to hit. But anyway, I thought I would bring this to your attention just because these two charts here are things worth paying attention to. And it's my goal to always give you an alternative perspective on what's really happening out here. So hopefully you found this of importance. If you did, hit that thumbs up, subscribe, follow wherever you're watching this at, share some thoughts down in the comment section. And once again, continue to get your weight up in many forms and facets. And if you haven't, here's the opportunity to find out more about the RTD Silver Team. It's my goal to try to reach 1,000 households to help them dollar cost average into stacking silver by automating the process. You can easily set up your own personal silver standard with as little as 1 ounce a month all the way up to 10 on rotation, and leave the guesswork out the equation and just have it shipped to your house directly. And that's just you on your personal side. But then the most important thing is to help other people realize what's going on. And by doing so, you're rewarded for your efforts. And so it does 3 things: allows you to stack weight, allows you to help others, and then earn income off of the value you bring to the system. So once again, if you're interested, go to the rethinkingthedollar.com website and scroll down and look for step 4, and then click the link here. It'll take you right to the page where you need to go and listen to the short video explanation and see if it's something for you. But if not, no matter what, continue to get your weight up. But anyway, just curious to hear your guys' thoughts. Drop a comment and I'll catch you guys on the next video. They're going to be coming faster nowadays. Catch you later.